So you finally decided to grow a brain now, didn't you? You finally decided that you should have broad, total world diversification in your portfolio. In this video, we're going to talk the VT ETF and the VTWAX index fund. I'm going to tell you how they're similar and how they're different. And when you're done, you're going to make your decision and you're going to get strongman's personal opinion on which one is the best. Let's go! First on the list is the VT ETF, also known as the Vanguard Total World Stock ETF. This is an index ETF that invests in every company in the world at market capitalization weights. And you get all that for a low expense ratio of 0.07%. How low is a 0.07% expense ratio? If you happen to invest $10,000 in this ETF, which I know you don't have because you're probably broke, you would pay $7 a year in management fees. I say again, $7 a year in management fees on $10,000 invested. I don't know about you, but that seems pretty cheap now, doesn't it? Now, since I'm assuming that you're an ignorant person, which you probably are, I'm going to explain to you what an ETF is. Very simply, it is an exchange-traded fund that you can buy and sell just like a stock. If you want immediate liquidity, you can sell an ETF at any time during the trading day. You cannot do this with a mutual fund, which we will talk about later. The true beauty of the VT ETF is that it holds 9,518 stocks. I say again, I repeat, 9,518 stocks. The median market capitalization or company size is $61 billion. So you're not buying a bunch of small cap, worthless, unprofitable companies. You're buying every company in the world, basically at market capitalization weights. And the best thing of all is that it provides foreign diversification, 40.9% to be exact. Now, foreign stocks get a bad rap, because recently, at least over the past decade, U.S. stocks have absolutely crushed international. However, if you look in the past and you analyze and you do a little bit of brain power, which I know is difficult for a lot of you people, you'll quickly realize that international stock outperformance and U.S. stock outperformance go in cycles. If you look at this chart and you see orange, that is a year in which international stocks have outperformed U.S. stocks. If you see yellow, that is a year when U.S. stocks outperformed foreign stocks. Now, what does it look like to you, ladies and gentlemen? It looks like to me, maybe I'm a little low IQ, but it looks like these things go in cycles. And we've recently had massive outperformance in U.S. stocks. So what do you think's going to happen potentially in the future, huh? So we've established that sometimes U.S. stocks outperform, and sometimes international stocks outperform. But here's the rub, the chicken rub. Do we know when U.S. stocks are going to outperform? Do we know when international stocks are going to outperform? No, we don't. So instead of trying to time the market, you can instead own everything. If you look at the top holdings of this fund, 59.1% of the stocks are in the United States. That's right, 59.1%. The rest are in countries such as Japan, the United Kingdom, China, Canada, France, Switzerland, etc., etc., etc. This is not an international fund. This is a global fund. You could put all your money in this fund, and that could be your entire portfolio, depending on your time horizon and investment objectives. What are some of the largest holdings in the VT ETF? You may recognize some of them. Apple, Microsoft, Amazon, Nvidia, Alphabet, aka Google, etc., etc., etc. This is a 100% stock investment. If you click on fixed income, you will see this fund includes no holdings of this type. So if you buy the VT ETF, you're going all in on stocks, baby. Woohoo! Does that make sense so far, ladies and gentlemen? Are you picking up what I'm putting down? My massive weights that I use to build these massive freaking traps. That's right, ladies and gentlemen. The VT ETF trades like a stock. If you buy it, you basically own every single company in the world at market capitalization weights. And you are making a statement that you cannot time the market. You just want to own the world and grow your wealth as the world becomes wealthier. Now let's move on to VTWAX. Ugh. Check out this beautiful, delicious, superstitious stallion. VTWAX, the Vanguard Total World Stock Index Fund Admiral Shares. Now you may say, strong man, this seems very similar to the VT ETF. And you would be 100% correct. Good job. Here's a cookie. But let me explain something to you. An ETF trades on the market on the exchange like a stock. An index fund does not do that. As a matter of fact, you cannot see the price change on a moment-to-moment basis. You have to wait till the end of the day to see a change in the price. You cannot liquidate VTWAX whenever you want. You must put in a buy or sell order, and that buy or sell order will be settled at the end of the trading day. The next important point about the VTWAX index fund is that the expense ratio is just a tad bit higher than VT. The VT ETF, as you may recall, will cost you $7 for every $10,000 that you have invested. The VTWAX index fund will cost you a grand total of $10 for every $10,000 that you have invested. So yes, you will be paying $3 more per year to have access to this beautiful, delicious, superstitious stallion. In addition, the hardest part to overcome is the investment minimum. That's right, ladies and gentlemen. In order to get access to Admiral shares of the VTWAX Index Fund, you must invest a minimum initially of $3,000. With the VT ETF, you only need enough money to buy one share. So you got to have a little bit of money saved before you can even consider buying VTWAX. Now, because you don't trust me, I'm going to prove to you right now that the VT ETF and VTWAX are the exact same thing. The only main difference is one trades like a stock throughout the day and one doesn't. This is VTWAX's number of stocks. It currently holds 9,518 stocks. Sounds pretty similar to the VT ETF now, doesn't it? On top of that, it also has 40.9% foreign or international holdings, just like the VT ETF. Now that's as short and sweet as I can possibly make the differences between the VT ETF, which is an exchange-traded fund, which trades like a stock, and the VTWAX Index Fund, which you can buy and sell, but the settlement happens at the end of the trading day. Now let me tell you what I prefer. I've shilled the VT ETF and I've shilled VTWAX. Personally, I own both in my portfolio. I have VT in my Fidelity brokerage because if I wanted to buy VTWAX in Fidelity, I'd probably get charged up the butt. But inside of Vanguard, which I also have a portfolio in, I only have VTWAX. And I'm here to tell you why. With VTWAX, you can set up an automatic contribution down to the cent. You can have an automatic draft come out of your checking account and get deposited and invested into VTWAX. You don't have to think, you don't have to worry about it, and you're not going to be tempted to potentially sell something in the middle of the trading day. That is the problem with ETFs. If you do not have good self-control and the stock market goes down, you may be tempted when you see VT dip to sell it because you got scared like a little bussy. But with VTWAX, you can't sell it in the middle of the day. You got to wait till the end of the day for the trade to settle. That will prevent you from potentially making an error. So personally, I prefer VTWAX, even though you're paying $3 more per year if you have $10,000 invested. That's my opinion. Take it or leave it. Yeah! Peace out.